Hey, it's Brian again. Today I'm going to show you another simple but useful technical analysis indicator called trend lines. Trend lines show tendencies for a price to not break through at a certain value. This is one of those that is easier to show than explain in words, so let me pull up a chart. This was this week's Litecoin versus US dollar chart. Look at this section where the price seemed to turn around and fall every time it hit a certain price. This is what we call a resistance trend line. Now look at the bottom here and you'll notice a trend that every time it got to this price, the price tended to rally and turn around. We call this a support trend line. So you'll see that the price of this commodity tended to bounce around between these two trend lines. Now look what happens when the price breaks through that support trend line. The price moves a lot. A good trade would have been a short trade here when the price first broke through. Trend lines don't have to be completely horizontal. They can follow a price as it moves. Look, you could probably make a justification for a support trend line being here, and one, somewhere around here as well. Once again, when the support trend line was broken, that would have been a great position for a short sell. That's all there really is to trend lines. Although considered a technical analysis tool, they're not really all that technical. There's really no agreed upon method for calculating them. Most people just kind of look at the chart and make them up. You saw me using MetaTrader 4 to draw trend lines, but MetaTrader 4 only currently works with btc-e, the Bitcoin exchange. Web-based exchanges like Poloniex don't typically have some indicators that more than a couple moving averages. But you can just use a third-party tool like TradingView to draw trend lines using Poloniex data. So check out my video on integrating Poloniex and TradingView here. Let me know in the comments if you have any questions or info to add about trend lines.